Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. We're going to go ahead and learn a lot about how to use Bitget, the exchange, and just generally the process of making an order, right? Like, what does that look like? So kind of more of a basic understanding, but we're going to use an example for leverage and kind of go from there, see if that is something that should essentially help you, because I get this request from a lot of my community members, and I like to make sure that we cover that, okay? Just to help you get on track and essentially get a good foothold in this exchange, because it's a fantastic exchange. First of all, I partnered with them mainly because I wanted to ensure that a lot of my US members have the option for leverage without a VPN. So it's fantastic in that sense, extremely legitimate, great company to work for and with, and I highly recommend you use the link in the description below to go ahead and get signed up so you can benefit from transferring USDT. You essentially get a bonus by transferring over funds as well as trading with them. So if you have trading volume, you're going to benefit from that. So take a look at that in your own time. But what we want to look at here, of course, is Bitget itself, how to use the exchange. Again, more of a primitive, basic understanding of how things work, just so you understand roughly what that might look like. Now, ideally, you'd want to go to spot and or do some kind of demo prior to doing any type of trading, right? So if you are newer, I do not recommend futures as a starting point. I recommend spot exchanges as a starting point, just based on the fact that you're risking what you have, not something you do not have, because liquidation can be a crazy thing if you're really new. You can get liquidated fast. But for the sake of this demo, since the majority of my members like to use leverage, we're going to use this as an example. And normally what you do, if you want your futures to be settled in USDT, which I typically recommend, that's my preferred method, you would select the first option here. Second option is USDC. Obviously, you prefer that coin. And then there's other options too. What we want to focus on here today would be just USDT demo trading. And I highly recommend doing this. You have no idea how much demo trading I've done in my day to get to where I'm at right now, okay? So again, if you're newer, no shame in practicing as much as possible in order to get where you need to go, okay? There's nothing wrong with that. In fact, paper trading, some of the best traders, I feel, a lot of my, some of my buddies actually are very good at this as well, and they paper trade often, and so do I, okay? So please keep that in mind if you're trying new strategies, etc. Make sure you apply it without risking all of your portfolio or some of your portfolio, okay? So again, that's just kind of the basics there. And what we want to kind of look at here, of course, is how to create an order and essentially what they mean, right? We take a look, of course, here at the different options. First of all, there is cross versus isolated margin. Now, I'll have a separate video including this. I would like to describe this a little bit better so you have a better understanding of how it works. But generally speaking, cross margin will use your entire portfolio as leverage to essentially allow that, it'll give you more range of motion, if you will, in your trades. So I recommend if you're using cross leverage, use very small position sizing. In fact, the same theory can be applied to isolated, but keep this in mind, isolated, once you hit 100% in the negative, in whichever direction you're going, it'll automatically close that and liquidate you. So whatever you essentially use, say you used $1,000 to take a trade, if you hit that 100x, essentially, that loss of 100%, it'll close your trade, whereas cross margin will add to your position based on what you have left available, giving you more flexibility. So me having really good risk tolerance, cross margin works well for me. If you have no risk tolerance, absolutely use demo trading first and get the feel for it, and then see if isolated versus cross margin is right for you, okay? So that's generally how that works. To rewind a little bit, to be able to quickly find your exchange if you want, you'd normally just click this little drop down here. There'd typically be, quite a few more coins to use. Right now there's only a few small ones, of course, ETH and EOS as examples here for the demo. But in the regular futures, you're gonna have a lot more options, and you can find them here with pressing that up and down arrow. Another thing to note as well is the leverage amount. Never recommend anything more than 20x. I have some members that are trading with 20x right now, and they're killing it. But again, when I send out signals myself per se, oftentimes it'll be somewhere between 10 to 20x, depending on the overall market and my confidence with that coin. So get used to a leverage amount and stick with it. Again, use paper trading and or demos essentially to ensure that you get the feel for it first, right? That's the general concept, is to get, find something that works well for you and stick to that system, right? Risk tolerance and risk management is all about honoring your minimizing loss and maximizing gain by essentially working within what you're comfortable with losing versus how much you're going to gain in that regard. Again, so just some things you can think about there. So that's what leverage looks like here in this here. You can go ahead and go up all the way up to 225x, which I do not recommend. Or just say you're part of my community, 71x. Some people are doing that as kind of a joke, I believe. And either way you look at it, it's absolutely something you want to be careful with. Respect leverage completely, right? Which is why spot exchanges is probably the best way to start, outside of just a demo for leverage to get the feel for it, okay? Because again, there's a lot of money to be made, but most people will lose that money depending on the risk tolerance, and most of them don't have a good risk tolerance, okay? So again, those are all things that I cover in my trading community. I actually have a series of videos, basically a trading college, that helps you understand how to operate these things. These are all things I cover, but this is specific to Bitget. And again, Bitget is an absolutely excellent exchange, and just based on my personal experience, I used them prior to actually partnering with them, and I can tell you it's absolutely a benefit to use. Okay, so just something to consider there. So taking a look here at the current situation, we've got our leverage, we've got our cross. Say hypothetically you want to take a trade. What does that look like? Well, pretty straightforward. Again, if you are new to trading, there's a few different options. You have limit orders, market orders, trailing stops, and of course, triggers. We can cover those other advanced trading techniques a little bit later. For the sake of this conversation, I think limit and market orders might be appropriate. And how it works is when you have a market order, you're basically just going to be getting filled at whatever price is best. The problem with market orders is you're oftentimes getting filled at the ask, not the bid, and it's one of those things where it's a situation where you're going to get filled lower than you want to. Or correction, if it's a long position, you're going to get filled higher than you want to, essentially giving you a higher price point because you're being impatient and you just want to get in quickly. Obviously, when things are moving fast, that is something you might want to consider, but for the most part, I only ever recommend limit orders, just based on the simple fact that it's tremendously easier to do, okay? And what I mean by easier is just that you pick a price, you pick a point in entry, you get filled at that level, and you actually get filled at that exact price point. Okay, so again, there's less slippage, and you're effectively not losing out on extra gains in the big picture. It adds up over time, especially when it comes to leverage. Okay, so just something to think about. Now, when it comes to other situations here, like hypothetically, say we want to long Bitcoin right now, we'd essentially put in our entry price, and what I recommend in a lot of cases is a round number. So we could do 19,600 as a round number, and then the amount, since this is in Bitcoin, of course you can change it to USDT, we'll just go ahead and do a small percentage, so 10% essentially here. And that's just kind of something to think about. Again, this is based on your risk tolerance, but generally speaking, that is what you want to do, is to use a percentage of your portfolio. When you're using leverage, I recommend that, just based on the fact that you'd have a specific amount you're consistently using per trade, and you're not just jumping in at 5,000, 3,000, 2,000. You have a structure of how you take your trade. So I definitely recommend that. So just say hypothetically we're looking at a 10% entry, 10% of our portfolio at 19.6. Say we want that, we want to buy a long, we'd essentially click buy a long and then confirm. All right. So what it's doing here, since it's a limit order and we didn't just market order jump right in, it's going to wait for the price action to come down to 19,600 before it fills this order. Okay. So keep in mind, there are rare occasions, or some occasions rather, depending on the way the market's moving, you may not get filled and you might be sitting out on the sidelines, missing in your trade. If that is the case, market order is probably the best way to go. There's not a tremendous amount of slippage per se, depending on the exchange that you're using and the volatility at that time. But bottom line is, at this point, I highly recommend using limit orders. It's just a little bit better. And once this gets filled effectively, we'll see down below here, show our total position and just all the details there that we need to know about the actual position itself. Okay. So that's essentially what we're looking at there. That is basically the bottom line of how to simply do that. If you take the 10% of this order, that will essentially put us at $270. Okay, and if you look at the total cost, it's technically $270.82 versus $270.55. So that is the maker-taker fee essentially, by showing you how much it's going to cost you by doing that trade. Again, that's the commission. Keep in mind though, Bitget has fantastic commission rates, and the maker-taker fees are, to the best of my knowledge, some of the best in the market right now. Okay, another reason why I recommend this to all of my members, just based on the fact that it's very simple, easy to use, And believe it or not, too, if you take a look at their application, they have like a 4.8 out of 5, and it's a fantastic way of basically utilizing this on the go, right? I highly recommend, of course, using TradingView concurrent with this when you take a trade, of course, but generally speaking, it is advantageous to use your mobile device in some cases, right? Either way, that is an option. Just keep that in mind. And as you can see, the price action keeps coming down, came down to 19,602 and didn't fill. That's what a limit order does. It only fills when you hit that exact price point. Because again, for a long position to the upside, you want a lower price point. Okay, that's essentially what we're looking at there. And if you take a look down below here, again, position will fill once it's filled. Following order is something we will look at later, but it shows open orders here. So this is a good way to kind of manage and understand what this might look like. It shows that we have a limit order in at 0.275 amount, as well as it's unexecuted. So it hasn't taken place just yet, obviously, because we're waiting for it to get filled. All right, so that's generally what you're looking at there. So what I'm going to do right now, just for the sake of this conversation, because you can kind of see essentially what's going on here with this limit order, we're going to go ahead and cancel this. And then, of course, it takes it away from the screen, so you know that your order has been canceled. Okay, and what we want to do is, of course, go back here to the market order section, and then to see essentially what that would look like. And since we've already delegated 10%, it's kind of default there to this number, and it'll tell us, instead of putting in a specific number, 19,600 as we tried before, it shows to be executed at the best price. All right, so again, best price may not be a good fill. Let's see what it does for us here. Let's go ahead and buy the long position at 10% with our 20x leverage cross margin. Okay, so what it's going to do here is it's going to show us the market order, essentially, and where we're at here. So the price in which we got filled was somewhere in the range of 19,620. So you can see there's a little bit of slippage there, of course. That is common when you do a market order. Again, when the price is on the run upside, it's definitely going to be an okay way to go. I don't want you to take away from this conversation that market orders are terrible. It's just not a preferred method for myself, and I'm a little more precise and specific with my trades, right? Again, really up to you in that sense, but here's what we want to look at. Of course, it shows our position, open orders, gives us the open price, the fair price. The margin is effectively the margin itself, but the liquidation is what I want you to understand here. This is important. So in this situation here, the way that it's set up, since this is a cross-leveraged trade and we have only used 10% of our portfolio, the price of Bitcoin would have to go all the way down to 8,812 to get fully liquidated. The likelihood of that is extremely low, right? So keep that in mind. That is essentially telling us right now that the liquidation price is essentially 8,800. Okay, so again, you got a little bit of wiggle room there, but also keep in mind too, with cross leverage, you're using more of your portfolio. That number is a lot lower than if you use isolated. Okay, so again, something to recognize. I'll make another video regarding isolated versus cross margin so you understand the differences there. I paraphrased already, but generally speaking, cross margin is only appropriate if you have good risk management and you understand the general concept that you're using your entire portfolio, not just a specific amount with a higher liquidation price. Okay, so again, that's just generally what we're looking at here. So as you can see, the price action is coming down. Return on investment is growing downside, right? Because the price is dumping now. That's exactly why you want to use a limit order in a lot of cases, because we could have got filled at a lower price point and had a less of a severe return on investment to the downside. Okay, again, just some things to kind of think about here. That is essentially what we're looking at in the overall sense of things. And what's great about this, it kind of tells you your total unrealized profit and loss, essentially down $22. That's right here. And then of course we see the return on investment keeps adjusting, right? So again, really awesome situation here. That's essentially how you would do a long position. I could give you an example of a short position, but it's essentially the same concept, right? Because again, you're buying high and selling lower, and it's essentially just a reverse action. So you'd basically do the exact same thing right here and do sell short instead, okay? That's essentially what we're looking at. So all in all, this is just kind of a quick little demo here. Once again, as a recap, please ensure when you first start trading, you are using USDT futures demo, if you'd like to use futures, of course, and make sure that you understand how that works and get the feel for it first before you take your first trade, okay? And once you start trading, at first, might recommend spot trading over leverage at first, just based on the fact that there's no liquidation. What you're using is what you're getting. It's not a exponential situation at all. So please try to steel yourself and be patient and effectively make sure that you are learning as much as you can beforehand. And those are all things that I like to teach. So make sure you check out my trading community. Of course, CryptoCache.tech is a website, link in the description below, where you can essentially become a community member. We have a lot of members coming over there right now, and it's a really fantastic experience. I've got a trading college, for lack of better terms, as well as signals that I send out for every single trade that I take, so you can learn how to structure your trades effectively. Be sure to check that out in your own time. But at this point, this is pretty much all I have here for you. We'll go ahead and have a lot more Bitget videos moving forward to get you that insight on how it works. But fantastic exchange. Highly recommend you use them. Once again, referral link is in the description below. I hope you have a great rest of your day. We'll see you the next one.